Welcome to The Explainer. Today, we're diving straight into Diodes Incorporated's absolutely massive Q1 2026 earnings beat to see exactly what's driving their incredible growth right now. Look, if you follow the semiconductor space at all, you already know it's a sector defined by intense cyclical swings and just dizzying technological shifts. But diodes, well, they just dropped a quarterly report that totally defied typical seasonal slowdowns and honestly set a very aggressive tone for the rest of the year. So we are going to visually unpack exactly how they pulled it off. Earnings reports can get pretty dense, so here's our quick roadmap. We're going to cover the Q1 earnings beat, check out those auto and industrial growth drivers, verify their real demand and global reach, peek at their financial health and Q2 outlook, and then wrap things up with analyst ratings and insider moves. Let's just jump right in. Section 1. The Q1 earnings beat, smashing expectations. Let's get right to those headline numbers, because Diodes completely blew past typical seasonality here. The company reported a staggering $405.5 million in revenue for the first quarter of 2026. To really put that into perspective, you have to remember that the first quarter is historically a much slower, seasonally weak period for the entire semiconductor industry. But Diodes hit the very high end of their guidance anyway. They actually managed a 3.5% sequential increase from the previous quarter, firmly anchoring what can only be described as a genuinely spectacular start to the year. When we break that revenue down, it translates to a 22.1% year-over-year surge. But what you should really be paying attention to here is their profitability. They drove gross margins up to 31.8%, which is a solid 70 basis point jump from the prior quarter. So how'd they do that? Primarily through much better factory utilization and a super strategic shift in their product mix toward far more profitable sectors. All that efficiency let them post a non-GAAP adjusted EPS of 43 cents and an adjusted net income of $19.8 million. Basically, they are squeezing out more profit from every single chip they sell. Moving on to Section 2, auto and industrial growth drivers powering the surge. To really understand how they achieved that margin expansion, we need to look at real-world applications. Diodes is embedding its chips into some seriously high-growth modern tech. They aren't just cranking out generic, run-of-the-mill components. Their analog and power solutions are absolutely critical for the infrastructure of tomorrow. We're talking about everything from AI servers and edge computing to the incredibly complex powertrains of modern electric vehicles. They've essentially positioned themselves right at the heart of the tech hardware revolution. Looking at this breakdown, the crucial takeaway is the weighting of these different sectors. While computing is still their largest single market at 26%, it's the high-margin automotive and industrial segments that really saw substantial growth. Automotive applications, think telematics, advanced driver assistance systems, motor control, those now make up 20% of revenue, which is actually up over 32% year over year, and industrial applications hit 24%. Put those together, and these two premium segments now make up a combined massive 44% of all product revenue. That specific mix shift is the real engine behind their expanding gross margins. All right, Section 3, real demand and global reach, a sustainable trend. Now, a major question floating around among analysts was whether this revenue jump was just companies restocking empty shelves or if we're looking at genuine sustained demand. Well, we actually got direct confirmation from leadership on this. Emily Yang, their senior VP of worldwide sales, stated emphatically that this is real demand. She specifically noted that channel inventory, so the stock held by distributors, actually declined in both dollars and weeks. In fact, total inventory days at quarter end were down to 157 days. That's a drop from 161 the previous quarter and 187 a year ago. That's huge because it proves end market demand is genuinely robust. Products are flowing straight through to the end user. But satisfying that kind of aggressive global demand requires a massive, deeply complex footprint. Diodes operates a sprawling network that stretches from their wafer fabrication facility in South Portland, Maine, all the way over to massive assembly and test facilities in Chengdu and Wuxi, China. It's a highly integrated, finely tuned global supply chain designed specifically for high-volume delivery. Despite that incredibly broad worldwide physical presence, though, the buyer landscape itself is surprisingly lopsided. Asia remains their ultimate revenue engine, accounting for a staggering 77% of all sales. Compare that to Europe at 14% and North America at just 9%. The Asian market's pretty much insatiable appetite for electronics and industrial components is the primary tide lifting Diodes' boat right now. Let's shift gears to Section 4, Financial Health and Q2 Outlook, looking ahead. With operations humming globally like that, let's take a look at the balance sheet.
They are sitting on a highly, highly liquid foundation. The company reported $409 million in cash, cash equivalents, restricted cash, and short-term investments. And this war chest is bolstered by the $32.4 million in free cash flow they generated this quarter alone, which, by the way, is a $20 million increase over the previous quarter. Throw in $891 million in working capital and an undrawn $225 million credit facility, and they have exceptional financial flexibility to fund capacity expansion or maybe even scoop up some potential acquisitions.
So, what does management plan to do with all this momentum? Well, they're projecting that the good times are just going to keep rolling right into Q2. They're guiding for a very aggressive $435 million in revenue, which implies an 18.8% year-over-year growth rate. And it gets even better. They expect to push gross margins even higher to 32.8% and deliver an adjusted EPS of 60 cents. They're clearly signaling immense confidence in their near-term pipeline.
Finally, Section 5, Analyst Ratings and Insider Moves, the market's reaction. To wrap things up, we really need to look at how Wall Street is reacting, because the optics here present a pretty fascinating dynamic. Analysts are exceptionally bullish on the stock following this report. Truist Securities actually upgraded the stock to a strong buy and rocketed their price target way up to $139, suggesting nearly 50% upside from pre-earnings levels. Baird is maintaining a buy with a $100 target, and Benchmark is holding a strong buy at $80. The institutional consensus is undeniably positive. However, to give you the full picture in this explainer, we do have to impartially note the immediate reality of the market. Because despite all those glowing upgrades, the massive earnings beat, and the incredibly strong Q2 guidance, the immediate market reaction was actually somewhat muted. The stock actually dropped around 1.6% shortly after the report was released. It's a great reminder that the stock market is a complex mechanism. Sometimes great news is already partially priced in, or broader macroeconomic fears just end up overshadowing a stellar individual earnings report. And just to add one more layer of complexity, for those of you closely watching the tape, a recent SEC filing showed a little bit of insider movement. President Jin Zhao sold 2,760 shares for about $282,000 just days after the earnings release. Now, to be completely clear, he still retains over 47,000 shares, so this was roughly just 5.5% of his total holdings. Insider sales can happen for a million personal financial reasons, but it is a data point investors always monitor closely right after a major quarterly beat. So, I'm going to leave you to ponder this final question. As Diodes Incorporated scales toward its stated long-term goal of hitting $2 billion in annual revenue, are the current fundamentals accurately priced into the stock? You've got these incredible growth metrics, the highly strategic product mix shifting into AI and automotive, and wildly bullish analysts on one side. But then you have a slightly hesitant short-term market reaction and a touch of insider selling on the other. That concludes our explainer on Diodes Q1 2026 earnings. Thanks so much for learning with us, and keep your focus sharp out there.